Let me ask you something. How many times have you checked your portfolio today? Once? Twice? 10 times? Be honest. Morning, first thing you did was open the stock app. During lunch, quick check. Evening, let's see how the market closed. Before sleeping, one last look. And every single time you checked, your mood changed. Green screen, you felt good. Red screen, anxiety kicked in. Now here's the interesting part. Your actual financial situation hasn't changed much. Maybe you're up 500 rupees. Maybe down at 0 but your emotional state? That's swinging like crazy. This is what I call the monkey mind in the stock market. And today, we're going to understand why this happens, why it's costing you money, and what you can do about it. The term monkey mind comes from Buddhist teachings. It describes how a mind jumps from thought to thought, just like a monkey jumping from branch to branch. Never still, never at rest. Now, this monkey mind was always there, thinking about work, family, relationships, future, past. But then, we gave this monkey a new playground, the stock market. And boy, does it love this playground. Because the stock market gives the monkey exactly what it craves. Constant stimulation, endless information, immediate feedback. Green candle, dopamine hit. Red candle, cortisol spike. It's like giving a kid unlimited access to a candy store. Every minute, there's something happening. Every hour, there's a new tip. Every day, there's a new multi-bagger stock someone's talking about. Your WhatsApp groups are full of it. Did you see Adani today? I made 15% in 2 days on this small cap. This YouTuber is saying Bank Nifty will crash. And your monkey mind? It's going absolutely crazy. Jumping from one thought to another. Should I buy this? Should I sell that? Everyone's making money except me. What if I miss out? This is FOMO, fear of missing out. This is greed. This is anxiety. All happening simultaneously in your head. And here's the problem. When your mind is in this state, jumping, anxious, greedy, you make terrible financial decisions. Let me break down exactly how the monkey mind costs you money. First, overtrading. You buy stock today. Tomorrow, it's up 2%. The monkey says, book profit. What if it falls? You sell. Next day, it's up another 5%. The monkey says, I told you. We missed out. Buy it back. You buy at a higher price. Then it falls 3%. The monkey panics. Sell. Sell. Cut your losses. You sell again. In 1 week, you've made 5 transactions. Each transaction has brokerage, taxes, charges. You've barely made any money, but you've paid a lot in fees. This is overtrading, and it's caused by the monkey's inability to sit still. Second, emotional decisions. Market is crashing. Everyone's panicking. Your portfolio is red. The monkey screams. The monkey screams louder this time. Get out. Save whatever you can. You sell everything at a loss. Market recovers in a week. The monkey says, see, it's going up. We should have stayed. You buy back at higher prices. Buy high, sell low. The exact opposite of what you should do. Third, chasing tips. Your friend made 20% on some penny stock. Your neighbor doubled money in some IPO. Some YouTube expert is screaming about a multi-bagger. The monkey can't handle it. We're missing out. Everyone's getting rich except us. Without research, without understanding, you throw money at whatever is trending. Most of the time, you're entering at the peak. And you lose money. Fourth, no patience. You bought a fundamentally good stock. Great company, solid business, good management. But it's not moving. It's been flat for 2 months. The monkey gets bored. This is going nowhere. Let's find something exciting. You sell. 6 months later, that stock has doubled. But you're not in it anymore because the monkey needed instant gratification. Fifth, analysis paralysis. You want to invest. You start researching. Too much information. Too many opinions. Too many conflicting views. One expert says buy. Another says sell. One YouTuber says it's a scam. Another says it's the next big thing. The monkey gets confused. It jumps from one opinion to another. And in this confusion, you either don't invest at all, or you make random decisions. Both cost you money. See the pattern? The monkey mind creates a cycle of poor decisions driven by fear, greed, FOMO, impatience, and confusion. And this cycle keeps you from building real wealth. Now let's understand the psychology behind this. The stock market is designed to trigger emotional responses. When prices go up, you feel smart, validated, happy. Your brain releases dopamine, the pleasure chemical. When prices go down, you feel anxious, stupid, stressed. Your brain releases cortisol, the stress hormone. This is the same mechanism as gambling. Same emotional roller coaster. And just like gambling, it can become addictive. You keep checking because your brain is seeking that dopamine hit, that little rush when you see green. But here's the thing. Successful investing has nothing to do with these emotional highs and lows. Warren Buffett, one of the greatest investors of all time, says, the stock market is designed to transfer money from the active to the patient. The patient, not the smart, not the ones with the best tips, not the ones who trade the most. The patient ones, the ones who can sit still while the monkey is screaming to do something. Because wealth in the stock market is built through compounding, letting your money grow over years, not days. Time in the market, not timing the market. Staying invested through ups and downs. Emotional discipline, not panicking when it's red, not getting greedy when it's green. But the monkey mind makes all of this impossible. Because the monkey wants action now, results now, excitement now. And that's exactly the opposite of what creates wealth. So how do you fix this? How do you tame the monkey? Step 1. Awareness. First, just notice when the monkey is acting up. When you feel the urge to check your portfolio for the 10th time, notice it. Oh, the monkey wants to check again. When you feel FOMO because someone made quick money, notice it. The monkey is feeling left out. Don't judge yourself. Don't fight it. Just notice. This simple act of noticing creates a gap between the impulse and the action. And in that gap, you have a choice. Step 2. Set rules. The monkey needs boundaries. Decide, I will check my portfolio only once a day. At 3:30 p.m., stick to it. Decide, I will hold every stock for a minimum of 6 months before selling. This prevents impulsive trading. Decide, I will not invest based on WhatsApp tips or YouTube videos. Do your own research or invest in index funds. Rules remove the need to make emotional decisions every time. Step 3. Automate. SIP, systematic investment plan. Set it and forget it. Every month, a fixed amount goes into your chosen mutual funds. Automatic. No decision fatigue. No monkey interference. This is the best way to build wealth if you don't want to actively manage investments. Step 4. Zoom out. When the monkey is panicking because the market fell 2% today, zoom out. Look at a 5-year chart. Look at a 10-year chart. Markets go up and down. That's normal. If you're investing for the long term, daily fluctuations don't matter. But the monkey only sees today. Teach it to see the bigger picture. Step 5. Separate identity from portfolio. You're not your portfolio. If it's up 10%, you're not a genius. If it's down 10%, you're not a failure. It's just money moving around. Your self-worth, your peace of mind, your happiness, these should not depend on red or green screens. This is the hardest but most important step. Look, I'm not saying don't invest in the stock market. I'm not saying become emotionless. Invest. Absolutely. The stock market is one of the best wealth creation tools. But invest with awareness. Invest with discipline. Invest with a plan. Not with a monkey mind. When you tame the monkey, something beautiful happens. You make better decisions. You sleep better at night. You stop obsessing over daily movements. And ironically, you make more money. Because you're patient. Because you're not overtrading. Because you're not panic selling at the bottom or greed buying at the top. You become what the market rewards, a calm, patient, disciplined investor. So here's the takeaway. The biggest enemy in your investment journey is not the market. It's not bad stocks. TS, not even lack of knowledge. It's your own monkey mind. Tame it. Train it. Set boundaries for it. And watch your wealth grow, not just in your portfolio, but in your peace of mind. Because at the end of the day, what's the point of making money if you're stressed, anxious, and constantly checking your phone? Real wealth is money plus peace. And that only comes when the monkey finally sits down and shuts up. Thanks for watching. If this made sense, let me know in the comments. And remember, be patient, be aware, be wealthy.